Today was a much better day for the stock market with the S&P 500 up 2.01%, closing at 3398.96. Thank you for watching this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for Wednesday, September 9th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. The first chart that we're looking at is a 3-minute, 3-day chart of the S&P 500. So each candlestick represents 3 minutes of trading. The reason I wanted to start with this chart is to show you Friday. Of course, Friday was a pretty bad day in the market, but the importance of this chart with respect to Friday is that we stopped right at the 3350 level on Friday, and then we made some progress from that point. On Tuesday the 8th, of course, the stock market was closed for Labor Day on Monday the 7th, but on Tuesday the 8th, yesterday, we traded down early in the morning down to 3340, and it looked like that level was going to hold until shortly after 2 o'clock the market started to sell off. We broke through the 3350, then 3340 area, came back up, hit the 3350 area, got rejected, and closed at the lows of the day, closing at 3330. Well, today we gapped up at the open and traded stronger for most of the day, had a little bit of a sell-off the last half an hour of the day, but all the same, it was a pretty decent day in the stock market. And the important thing to remember from this particular chart is that 3330 is now our line in the sand. So as long as we stay above 3330 on the S&P 500 going forward, we're probably going to be okay. This next chart that we're going to look at is an 18-month daily candlestick chart of the S&P 500. So each candlestick does represent 1 day of trading. And the 3 blue lines are the support levels that are slightly below where we're currently trading. So the first one is that 3330 level. And we can see, of course, that we bounced off of that 3330 level yesterday on the 8th of September. There's a little bit of trading that happened around the 3330 area at the first part of August, and then some trading during February. And of course, you can see here that the 3330 area acted as overhead resistance for a few days back in January of this year. But there's not a ton of trading that has happened around this 3330 area. So just keep that in mind that, yes, we bounced off of this level yesterday. However, there is not a ton of support at 3330. So if we roll back over and start to go down again over the next few days or few weeks, and we break beneath the 3330 area, we will likely go down to 3200, and you can see that there's a decent amount of trading there, but not a substantial amount. But 3000 is where a good amount of support can be found going clear back into 2019. You can see in July of 19, and then again in September, we had some trading right around in there. We finally broke above this area in October, and you can see that once we got back above this area after the sell-off in February and March, then the 3000 area on the S&P 500 acted as an area of support. So if we break below 3330 and then 3200, we will likely go down somewhere around this 3000 level. The green line is the 200-day moving average. So it's possible that if we break below 3200, we might stop at the 200-day moving average. That does happen, as we can see, on a pretty regular basis over time. And if you've watched any of my other videos over the last few weeks, I've talked extensively about how important the 200-day or 40-week, same thing, moving average is. But if the 200-day doesn't hold, then we would likely find ourselves back down to this 3000 area. So the good news is right now is we did bounce off the 3330 level, but there is not a ton of trading at that level. So don't be surprised if we roll back over here and find ourselves going beneath the 3330 level at some point over the next few weeks. It definitely could happen. The next chart that we're looking at is for the NASDAQ 100, the triple Qs, and what we can see here is that yesterday the NASDAQ 100 came down and stopped right at the 50-day moving average, and today we were up 2.90% on the NASDAQ 100 on the triple Qs. So pretty nice day in the tech area. just keep in mind that, yeah, it was great that we bounced off of the 50, and hopefully this will hold for a while, but we are still really extended above the long-term moving average. So we will need to keep an eye on this, and if we roll over and go beneath the 50-day moving average, it is very likely that we will head down to or somewhere around the 200-day moving average. So the tech area has been really the leadership area of the stock market, especially since the bottom on March 23rd, but even over the last couple of years. So it will be important to maintain this tech leadership. If the triple Qs and the tech sector within the S&P 500 continue to correct over the next few weeks, it will likely continue to take the entire stock market down with it. The tech sector is an extremely important sector within the entire stock market, and it will be very difficult for the stock market to hold up if the technology stocks continue to roll over from here. However, the converse is also true. As long as tech maintains its upward trajectory, we're probably going to be okay, and the stock market will probably continue to rise from here. But just understand, we are still extremely overbought, overextended, and whatever fundamental analysis you want to do in addition to the technical analysis, you will find that we are trading at very, very lofty levels in the entire stock market, but especially in a lot of the technology type stocks. The one last thing I want to point out on this chart is look at the volume that we had during the 3 distribution days versus the volume on today, which would be considered an accumulation day. So this was some serious volume that was coming out of the NASDAQ 100 during the last 3 days when we sold off.